mouse around the menu. Here it goes. Okay.
All right, you
All
got
right.
my screen? Great.
Got your screen. So, good time to be talking to you since, how long have we been having these conversations?
I think going on 2 years.
Okay. And I remember a couple of years ago when no one was talking about a possible conflict with Iran, you were. Is there going to be a hot conflict there, Kirk? What do you think?
I talked about it about 2 years ago and got mocked pretty heavily when I said that we were on the path to a confrontation with Iran. And now that we are at the doorstep, the question becomes, are we going to enter? And
well, we were a few minutes away a week ago.
That's what they say.
Okay, so I'm interested in your intelligence, what your view is here, and I'll shut up.
Well, I think that we're in a situation where there could be a conflict there. I highly doubt that it'll be with U.S. boots on the ground unless there is some sort of internal overthrow where we would support it. But the idea that there won't be missiles, that Israel wouldn't do something, I think is pretty naive. And I've always thought it was pretty naive. Iran just broke the nuclear accord by enriching too much uranium. That was reported yesterday. So the odds that President Trump wouldn't have a response to that, I think, are pretty low. So we'll see what happens. But at a minimum, I think that the tensions remain. The sanctions remain for an extended period of time. I don't see the sanctions coming off of Iran this year or next year. Do you?
No, not until after the elections, maybe.
Right.
I'm curious. You're showing Stratfor up here. Did you write for them, or this is just
No?
You agree with their assessment?
There's somebody who I have been using for around a decade, maybe longer.
Okay.
And their quarterly outlooks, I think, are pretty valuable. So they just happen to have two paragraphs that fit very nicely on the screen that I thought I'd put up there. And both of these things impact oil a lot. Oil has been suppressed despite the OPEC cuts and despite rising demand, because people fear that demand will fall off because of slowing growth due to tightening global trade. And I discussed with my subscribers recently, last Friday actually, that first fear, that global trade decreasing, leading to decreasing global GDP growth, might not have the same correlations that it has in the past. We know that from machine learning that supply chains are going to move closer to customers when they can. So is it really as big of a deal today that comparative advantage for manufacturing isn't moving to China or to Vietnam or Mexico as much anymore? Does it matter to global trade and the global GDP that because a robot in China is the same price as a robot in America, is the same price as a robot in South America or Europe or Mexico? Are those same correlations between global trade and global GDP going to persist? And I don't believe that they will. I believe that you're going to see a world, and clearly we'll have a transition that's very tradable. I believe that over the next several years, as supply chains move for various reasons, one, President Trump pushing them to move, but also machine learning and automation making it happen anyway, that global trade, the nature of it is going to change. and it's not necessarily going to make economic growth slow down. So I think that there's a lot of fear based on global trade, which has historically been almost perfectly correlated to global GDP growth. People are afraid that global trade decreasing is going to decrease global GDP growth. And I don't know that that's the case anymore. I think there will be some correlation, but it won't be the direct, almost one-to-one correlation that we've seen in the past.
Okay, well, can't we have slow global growth and a supply shock? That even a slowing global economy will not slow down price appreciation of a commodity that's having supply issues?
I agree. So
Stagflation 2.0.
Right. I think that, first of all, I don't believe that global growth is going to slow that much, not in the short term. We're getting some minor indicators that growth isn't going to grow as much. There won't be as much growth.
Okay, so then what a great contrarian trade to be shorting bonds here.
Right. Well, maybe.
Because they're priced for recession.
Right, they're definitely priced for recession.
Okay, and the expectations for the Fed, not just a cut, but maybe a half a basis point, and 4 in the future. Do you think the Fed can hold up the long end of the market, even though they're playing with the short end?
We'll see.
Okay. It's just a gut feeling I have, and some technical things that are saying, and how crowded the bond trade is, Kirk. So
right.
I'm just wondering where your head's at on that, since you don't seem to be buying the narrative of a global slowdown.
No, like I said, I think there will be slower growth, right? My theory has been for several years, since my market watch days around 2015, 16, I said that we were going to get slow growth forever. And what is slow growth forever? Slow growth forever is the combination, mainly led by demographics, right? Aging demographics, slowing the economy down, and machine learning and technology, which is disinflationary, and then the gigantic global debt overhang. It's going to be difficult for us to get the same growth this century as we had in the second half of last century. And people try to find quarter-to-quarter reasons for that, but the reasons aren't quarter-to-quarter. The reasons are very long-term. There's very long-term pressure on growth. But the counterweights are the central banks, fiscal policy, the changing narratives and spending habits of large generations, particularly the millennials. What is technology driving as a shift in employment? All of those things. So, you have people running around out there calling for some big bubble to burst. We're essentially in the same place as we were 12 years ago. And that means that to some people that, well, then we have to have a crisis. But 12 years is a lot of time for that money to spread around, for the inflationary impact of money printing to change where the nominal numbers would lie. So I don't believe that we have a lot of bubbles right now. That doesn't mean that we won't form them through further bad policy, but we made a lot of money this spring on TLT, right? As the long bonds came down, we made a lot of money. I'm not in government bonds right now. My asset allocation, in fact, I just printed that for my subscribers. I can show you. In April, we went to an asset allocation, depending on how aggressive or conservative you were, 35% cash, but we dumped our government bonds. So we don't have government bonds right now. Why? Because the Fed is acting as if they will lower interest rates a little bit. Will that impact the long end of the curve? I don't think so, because I think the smart money realizes that slow growth forever is a real thing, that we're not going to suddenly have a bunch of ripped off 4% prints or even 3% prints. We had the sugar high from the tax breaks, but the reality is until we get very good fiscal policy, until we rebuild the infrastructure of the planet, in particular energy and water, growth is going to muddle along. We've heard John Malden and other people talk about, the economy will muddle along. It won't be spectacular. Okay. It won't fall off a cliff.
I'm just trying to understand. You got out of bonds, but you still think the bond market is lower, rates are lower for longer. Why would you liquidate your bond? Why did you liquidate your bond position?
Because the easy money was made. I'm not in the hard money. So when rates went from, 3-ish down to 2-ish, that was easy money. From 2 to 1, who knows?
Okay.
And when would that happen? Now, you guys are much better traders than me. I'm one of the worst traders.
Oh, don't use that. Go ahead.
So, I am sitting on cash mainly because, and I catch grief for this, but I've called the presidential election correctly every single time since 1988. From college to the last one, I called President Trump winning. And I think it's very easy to see that he's going to lose next year. So if he's going to lose next year, 8.8 million votes the Republicans lost by in the midterms. That's almost triple the different, triple what the popular vote was in the presidential election. So the odds of President Trump winning next year are incredibly slim. I put it at somewhere between 6 and 13% that he would win. So if I think he's going to lose, then what is going to be the reaction by investors? Well, given that there are huge tax breaks right now for investors, you would think, and we saw this under President Bush twice, front end and back end, investors sold to preserve the tax breaks on their highly appreciated assets. I think that next year is going to see a fourth quarter very similar to 2018, where things started off choppy and then fell off a cliff. There aren't a lot of marginal buyers in the markets in general, and that's not going to change. Even with the Fed ending quantitative tightening, which will definitely probably give us another sugar high in September, if you have a lot of big investors, the type of investors that control 70-80% of the money in the market, selling to lock in gains because their tax rate they think is going to go from 10 or 15% up to their marginal income tax rate, which is what I think the policy will probably be. You're going to see big time selling, and there's not going to be anybody there to fill the gap. So could there be another trade in bonds next year? I think so, especially if, the long rate, rises a little bit and you see, policies that allow it to happen. But, the short end of the curve, we should have learned, does not impact the long end of the curve all that much anymore. So if they allow, a little bit of a rally, people, sentiment drives things, then you could see the long bond tick up, a half a point. I don't think it'll go back to its highs, but, or back to its high interest rate. Then you could get another trade in bonds on fear late next year sometime. Okay. But between now and then, what do I think? I think I'm looking for a small pullback over the summer. I think that I'm probably going to buy the tech companies short term, as long as there's hope of an agreement with China. But my big investment right now is oil, because the OPEC cuts are real. Russia is not hindering them. Excuse me,
buddy. It's all right.
I just got back from 3 weeks in the desert, and I'm adjusting to Wisconsin pollen and humidity. But
So I
So,
thought maybe you ate some sand
oh man,
in
I
the
tell you
desert.
what,
All right, so I follow one of your favorites here, ECA. So
yeah,
that's still a hold, and at these levels at 514, you still like it, right? Because we're only, when you go back and look at like weekly ranges, we're way down there. I mean, a year ago in the spring, this was trading $13. Looks like we had that break um, to 5 or so, and we made new lows recently. I'm looking at the weekly. A lot of divergence in it. Looks like a second drive to me and potential low. So you like it down here, and what's think we could challenge last year's highs, Kirk?
yes. However, I wrote a pretty long article about this, why oil stocks are priced for Armageddon. And some of the factors include the divestment movement. So the divestment movement has been remarkably successful. So you have 350.org has gotten over 1,000 institutions to sell their commit to selling their fossil fuel investments. And
Okay, so I'm showing the chart. If you look at the screen, I'm showing ECA here.
yeah, I mean the whole, and if you use XOP, if you can overlay XOP, you would see that is, I mean, it just really all fell off a cliff, and that has to do with two things. One, there is just general sentiment against oil, and that matters. And you have a lack of marginal buyers in the markets in general who prefer to invest in marijuana stocks and technology and anything that's technology related. The millennials don't invest a ton of money yet, but they're not investing in oil stocks. And then in Norway, back in March, announced that they're going to start divesting. So if you saw the list from Norway, it included every stock in XOP except for one. Norway sold every single one of these stocks. And they're the biggest sovereign wealth fund in the world. Now, they're selling, and you can tell by the sideways movement of this chart now in the last several weeks anyway, and a little bit of a rebound. Norway is probably done selling. They've sold 7.6 billion or whatever it was of assets. So
are you price sensitive to entries when you have a narrative and a theme for your subscribers, or how do you approach entries with it's the art of this business is not if, it's when.
Right.
So
right.
I know you say you're not a short-term trader, but even if you're a long-term trader, are you price sensitive on your entries?
Yes, and I've not been great at it with the oil.
Okay.
Stock.
And how about risk management? Do you know when you're getting in how much you're willing to risk on that position?
You should. I do. Okay. I think a lot of people overextend, right? Because they scale in. I'm looking for absolute value and then momentum back up. And a lot of people scale in every 2 or 3%, even though the folks I work with are position traders, right? Looking at 1 and 2 and 3 year intervals.
Okay. What was that first term that you used? You looked for what kind of value?
It's just absolute, intrinsic value, right?
Okay. Does ECA have intrinsic value at 514?
If they were to liquidate, they'd get over $10 a share.
Okay, so that's what you mean. So the assets versus the shares would price it up at 10.
Right.
Okay.
And that's based on oil around 60.
Okay.
If oil is around 80, it's $20 all day long.
Okay. Is that what you think is going to happen here? You're looking for $80 oil?
I've been saying $80 oil for over a year now and consistently been wrong because, one, President Trump kind of tricked us on the Iran sanctions the first time. We got the big fourth quarter sell-off. We have all the growth fears. So
how about this? I learned this from a legend, Peter DeSorio at FIBO SR. The market's job is to convince us convince us it's something that it's not.
Right.
So it's been doing a pretty good job on you, bro.
Yeah, no, they got me, right? So, I mean, I don't make a lot of big mistakes, but the whole when
I know you have poker
if.
to supplement your income, so I'm not worried about it.
I did pretty well at that, too.
Okay.
But,
well, I'm just wondering if I should start scaling into ECA here at $5.
So I think that if you haven't, take a look at the way that's forming on the bottom there.
Yeah, I see it. I'm showing
it's very constructive now.
It definitely started to show some divergences on larger time frames. Let me look at the 4 hour here. Yeah, 4 hour. It is acting constructive. Okay, I agree. Let's see the 1 hour.
So
that's as short term as you get. Okay, yeah.
That break where it fell down.
Yeah.
I mean, you talk about fooling me once.
You mean last winter?
No, here in May.
Okay, yeah. So with the market, it actually led the market down.
Right.
Okay.
So I really thought that it was going to move the other way. I thought that all the fundamentals were in place, and sentiment, you know, the what the crowd wanted to do was something different than what I thought it should do.
Yeah, but you know, let me just remind our audience that you know, when you were looking at things like Chesapeake a year ago, when we had that very nice rally, you had call positions on, and you participated in that rally. So you know, anyone that thinks that anyone can be right all the time, let's shine a light on it. But you know, it's we all go through drawdown periods, and what do you do psychologically, Kirk, to keep your head in the game? Some people just need to walk away for a while when they go through a rough patch. What do you tell yourself? What's your self-talk like when you're going through a period like this?
Well, me personally, I'm not tremendously emotional because I've been doing this so long that I just know that every fifth trade or so, I'm going to take one in the shorts. So I just end up on the poker tables. You know, and then I make myself. Yeah, I make myself feel better by taking people's money there.
Okay. But I watched Rounders again last night.
Did you really?
Okay, yeah. So you're. Are you Matt Damon or?
No, I'm one of those guys in the background that doesn't get into the game.
All right. Well, I tell you what, Kirk. You know, it's always easy for people to come on and toot their horn when they're right. But it takes, you know, someone that's authentic to be real with people and say that once in a while, it's so hard to say, but it's cathartic. I was wrong. Or even, I don't know. But, you know, your farsightedness on Iran is amazing to me. And I have a lot of respect for you, my trading warrior brother. And I know that you're gonna have 4 winners in a row and a great 4th of July. And when you watch those fireworks go off this year, Kirk, you know, after they explode and the trails start coming down, may those be pips that just rain down on you for the rest of the year.
Well, I do appreciate that. You know, I have one thing before we go. And you can maybe share this with some of your trading buddies. I would take a look at Devon Energy.
What's the symbol?
DVN.
Okay, hold on. $28.90 last. Not open yet. Okay.
So I maxed out my position last week while I was in Vegas. I like the way that this is behaving, and I mentioned to subscribers in the last 6 weeks or so, we know that Devon Energy is actively engaged in merger talks. And I think when that happens...
As a target or as the acquirer?
It looks like it's going to be a merger of equals.
Okay.
If I had to guess, And I've been trying to get the information, but it's not public, so I haven't been able to find it.
Oh, Gordon Gekko and Bud Fox will get it for you.
Yeah, right. It wouldn't surprise
Bobby
me.
Axelrod in the modern era.
Right. It wouldn't surprise me if they merged with Marathon Oil.
Okay, and you think it's accretive, and that'll
right. And you take a look at companies like Devon Energy, who's willing to do a merger, or you take a look at companies like Concho or Pioneer, who are Permian pure plays, and they're cutting their expenses dramatically. So if they can keep production gently rising with 25 and 30 and 35 and 40 and 50% less personnel, that's a lot of money that's going to drop to the bottom line. And ultimately, if the markets don't drive these oil stocks back up, you're going to see a lot of take privates, because these oil executives aren't dumb. They know that there's another decade of oil demand out there, right? Oil demand's not going to fall off a cliff for at least a decade, maybe two,
okay.
Based on electric vehicles. So these oil executives know that if the market's not going to give them a price on their stock, which is one way that executives get paid, then they're going to take these companies private. And they're just going to become massive inside owners of these companies, and they're just going to flow all that money into their pockets as these companies become more and more profitable. The wildcatters are already going bankrupt. So the survivors, these mid-sized companies and a little bit larger, all the way up to Occidental. I love the Occidental Anadarko merger, and I love that Icahn is involved. Icahn is going to get Occidental to sell off all their non-core assets, right? He's not going to undo the merger, but he's going to get Occidental. He's going to push them to sell off all of their non-core assets, which they are already doing, but Icahn will make it happen faster because he's got no patience. So a lot of these companies are going to make money, and the question becomes, how much? Do they go private and they make us a little bit of money, or do they stay public and get managed well and triple our money for us? I don't know. But I think there's very limited downside in these. X a recession. If there is a recession, then you get another buying opportunity. So you might have to trade it. And as I said in a different article several months ago, I think in January, oil investing is dead. Oil trading is alive and well. So, I think that these are going to be some of the most tradable stocks in the market for you if you're a trader. And the price of oil, I think, just keeps drifting up until, there's that EV moment where people go, oh my God, oil demand's going to start falling. But between now and then, I think you can trade these, and, if you're an option
trader,
buy
the dips and take profits on the rips.
Yeah. Okay. Yeah, I think if you're an option trader, you can do very well with these.
Okay. All right. Well, Kirk, thanks so much for hanging out with us today.
Yeah, you have a great long weekend. I wish we had time to tell poker stories because I have a bunch of them. But I did write a blog. So the blog is titled Poker Investing in 3 Weeks in the Desert.
Oh, so, cool. And people could find this where?
Just Google it. It's on Seeking Alpha, but if you Google Poker Investing in 3 Weeks in the Desert, I think there were 6 or 7 blogs.
Okay. And you can also follow Kirk on Twitter at Kirk Spano, Spano. Am I pronouncing it right?
Yep, and that's probably the best way to track me because my Twitter feed leads to everything else.
Okay, Kirk. Well, have a great summer trading season. It sounds like you're going to have to start using daily charts and not just monthlies anymore. So,
you're going to make me work harder.
Yeah. Okay. Well, keeps you young, bro. So, thanks a lot for being with us and sharing some ideas about Devon. And, you were one of the first to talk about potential conflict with Iran. So, I really appreciate you coming in and edifying our community every once in a while, Kirk. Let's get back together in the fall and see what's going on, okay?
All right, you take care.
All right, everyone. That's Kirk Spano. That's a wrap for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. I count people like Kirk who come in and, with their giving spirit to try and give us information that may be actionable, and you guys for hanging out with us. So, adios. See everyone tomorrow. Lydia Iden Finkley at Faith Might will be with us to talk cable.